All right. Good morning, good afternoon, everybody. Trini John from Simpler Trading. I hope everybody's doing well. We'll be covering the broad market analysis today from the 28th of January into, it looks like February the 2nd. So, can you believe it? We're almost through this first month of the year, and it's been an amazing month. Matter of fact, before I get started here, I make it very clear and very super transparent. And Januaries are always pretty damn easy, and then somehow February's turned into my worst months. And they're not easy. And I just find it very ironic. I just stuck that post out there on X talking about, the possibility if there was ever a time, that I was going to wager. And I really don't like calling tops. What I do like calling are supply and demand zones and, teaching you how to understand how to pull back or take a trade to the long side. But right here coming into this week, I mean, look at these things that I just noted here on X. So the fear and greed is at 77, which puts us at extreme greed. And then we have the skew, which is 151. And we'll be going over this stuff here in a second. And 151, I mean, that's really high. Historically, we do get a pullback. Timing is the variable, obviously, with the market. And then we have SPY and QQQ at all-time highs. They're pulling back just a tad from last week. We have the rate decision this week. And then on top of that, we have this lineup for earnings. It's like the Grand Palooza, man. It is absolutely like Christmas for me. So I'm like super excited to trade this stuff, but I'm also, walking maybe on some eggshells here. So let's just go over the charts. Let's talk technical. I do think that it's going to be more of a day trading environment. I feel like, people have been saying that for a long time. December, January kind of puts you in the mode of swing trading, and this is where I get caught off balance almost every single year for the last several years. And, I thought I timed my vacation perfectly by taking my cruise, 2 weeks ago. And I thought to myself, hey, the market will pull back. It'll be perfect. Instead, the market made new highs, and it was a good week, even when I was gone. But yeah, so here we are. Let's get started. This week's major U.S. economic reports and Fed speakers. And you can see right away, I've underlined anything that I think is important. Now, as a supply and demand trader, as you guys all know, we put supply and demand on charts, and then I teach you how to find those supply and demand, and then I teach you how to execute those. So anything that I'm showing you far as economic reports and Fed speakers, this is like exciting. This is just a catalyst that pushes price into supply and demand that we've already identified on charts today, right? And then tomorrow we'll give you charts, and tonight I'll do a couple more videos, short videos on names that I may be looking for, and I'll be talking about entries, stops, and targets, right? That's what it's all about. So again, all this stuff is just noise that pushes price to supply and demand. On Tuesday, nothing for Monday, so let's just go ahead and mark that out. Tuesday, we have job openings and consumer confidence. Consumer confidence, important to understand once the market opens, you only have so many minutes before this data comes out, so don't get caught off guard. I would definitely put an asterisk by that. On Wednesday, January the 31st, closing out the monthly candle, and right now we have what's called three white soldiers on the monthly, so three nice solid months up. It's been really, really nice there. I believe I may have to go back and look. No, that was the weekly. Coming down here on Wednesday, the 31st, ADP employment cost index, Chicago Business Barometer, PMI, and then the big one, Fed interest rate decision. So, regardless if you think you know what's going to happen, the market always has a way of surprising traders. So, just know where your levels are, and I'll be presenting those. Matter of fact, this is my most exciting time to actually trade live in front of everybody. Well, every single day is fun and live and exciting, but I love to put all of the traders who say sit on your hands, I love to put them into this category and say, hey, come out and watch me. And if you want to watch us trade live into an event, this would be the time. We're going to identify levels and we're going to execute those levels regardless of what data comes out. Okay, so that's always really fun. And then on Thursday, we have initial jobless claims, U.S. productivity, S&P U.S. manufacturer PMI, ISM manufacturing, and then on Friday, U.S. non-farm payroll, U.S. unemployment rate, U.S. hourly wages, factory orders, and consumer sentiment again there at 10 o'clock. So very, very exciting. Next thing we get to, again, this is our earning whispers, and you can see right away it is jam packed. And I am super excited for this week. All right. But again, like everything is happening this week, I feel like, which is really exciting at all time highs, right? Now, I've underlined a lot of different names here, and these names are names that I am interested in trading into earnings. I love trading earnings, and we're not talking about like the gamble type of trade, like, hey, I really like this name, so I'm going to buy an at the money call, and then you lose all your money. So I like to use debit spreads around supply and demand into earnings. If you've never seen me do that, please, stop by my YouTube channel. You can watch that. It's all free. I'm showing you how to do it. And if you want to see me do it live and ask more questions, you can come over to Simpler, pay $7 and hang out with us for an entire week and you get to see it. We got things like Pfizer coming in on Tuesday, Microsoft, AMD, UPS, Google, Starbucks, JetBlue. And then moving over into Wednesday, Boeing, Qualcomm, all right, and MasterCard. And then on Thursday, another exciting day, we have Apple, Amazon, Meta, Royal Caribbean, Peloton. I underlined it because I'm just kind of curious how it's doing. It's much like the Peloton that's sitting in my office right now. It looks a bit dusty. Meta, Team, Honeywell, Skechers. That's right, Skechers are making a comeback, so I'll be watching that as well. And then I have an asterisk here on Bristol Myers because I am holding a very, very small position. I think I have 100 shares in that, and I may be looking to hedge that with some put debit. So we'll talk about that on Thursday. Let's go ahead and move down here. All right, so this is our SPY and QQQ neutral strategy, and I push these out on this video right here. And before I forget, guys, please like this video, please subscribe, and when I post it on X, if you're a follower there, please retweet and like that video as well. That really helps me get some traction, and I truly believe that supply and demand can help traders, whether you think you have a great process or not. I think supply and demand is really the hidden gem that a lot of traders are looking for. So I hope to be able to help other traders out there as well. Moving on down, again, I really make this simple. And the strategy is for traders who are sitting, who are not just sitting in front of the charts, but need to get out, do things, whether they have jobs and other things going on. This is built off of supply and demand, some Fibonacci levels and so forth, and some of my indicators, but it's really straightforward. You go long above the green and you trim at the targets to the upside. You go long above the green, that's QQQ, and you trim to the targets to the upside. You can see on both of these, we had trendy turns come in. That's just kind of like an early signal to say, hey guys, time to go ahead and take your profits and be careful. Another thing I want to show you before I move on, because some of you have never probably heard this, but if we get to these targets and say we're doing really well and you start to get a little FOMO, and FOMO means, hey, you're looking at your profits, you're really excited, but you want more, right? Everybody wants more. Everybody's like super greedy when it comes to trading. Don't fall into that category. Use technical analysis. What I would recommend is taking your Fibonacci's and finding your pivot low here. And as soon as you start to pull back, I want you to find the 23.6 of that level. And if it can't hold, get out, right? Just get out and then re-enter if needed. But just to be safe, the 23 and 38.2% of a trend, once it's broken, it's pretty much not as bullish as it was. And we like to show that live every single morning when we're looking at like quick scalps or intraday trading as well. Okay, but you can see they worked out really well. This one, QQQ, would have worked very well into your targets, but if for some reason you took this on a Monday and you came back on a Friday, you could see you would have been crushed by premium. Okay, so over here, a little bit different on SPY. SPY was kind of like leading, if you will. It started at 482. You got long there. We hit up towards 487, and we closed at 486. So not as bad as QQQ. Now, this is the next one. This is where if you want to go back to this section and go ahead and freeze this, this is our new SPY and QQQ neutral strategy for this week. A couple things I want to point out. I went ahead and drew these green zones down here. I just am using what I would consider imbalanced demand zones on this range. And in the event that something bad were to happen, like let's just say that no matter what happens this week, even if Amazon and Google and all these guys do well, but the market pulls back, I've seen this before. It's not because specifically these names, they didn't report well. It's just that the market is a little overstretched. So just be willing to understand that not all things make sense in the market, but there are things technically that just say, hey, if we get that big pullback and all my targets are hit to the downside, I just want you to be aware of where these demand zones are. Okay. So I don't have lines on them, but if you look to the right, you can kind of see what numbers we are talking about where we could find some love. Okay. So don't be scared if something like that happens. We actually get really excited because we're waiting for prices to get to these zones. I love clearance racks. It's where I want to at least try to get long. But again, neutral strategy, just stick to the technical analysis. The first thing that I'll tell you is if we look over here on the SPY, notice how we have these previous highs right here. Now, what I'll be looking for, let's say that we get a bounce tonight. If we can't make and or establish a new pivot high, then I will tell you that there's something sketchy going on. All right. Let's say that some big names go ahead and report and you're like, wow, man, things are awesome. Google did well, Starbucks did well, whatever. But prices push and then they still give, like they pull back and we're not making new pivot highs, something's up. All right. And again, there's a big, there's a rate decision coming out. So it all is basically, are we setting the playing field for something bigger to happen? Don't let the leaders of the market give you those rose-colored glasses, if you will. Does that make sense? And good morning over here on YouTube. Good morning, everybody. Hope you're doing well. All right. So just please understand that just because the big names report and they do well does not mean the market has to go up. All right. Now over here on the Qs, you could see what I notice here is we have lower pivot highs. Okay. So the Qs, the NASDAQ futures have been leading in this market. And so far, they're not really showing me that it's bearish or anything like that, but they are failing to make new highs off of last week's high. All right. Where do I find the better value? Again, guys, it's somewhere between T2, all right, T2, target 2, all the way to the green box. T2, all the way to the green box. This is where I'd prefer to buy if we get that pullback next week. Now, disclaimer, it may sound like that I'm bearish, and you all know me very well. I'll still trade to the upside from lower levels, or if we break above this neutral strategy, I'll be looking to be long in my portfolio as well. All right. So anything that I say, please understand price is king. Let's go ahead and move down here. This is going to be SPY. This is the bigger picture. I'm going to move this out of the way. All right. Just like that. I'm going to bring over my trading view, and this is what I see coming into the quarter. First, what I love about TradingView, we have 2 months and 1 day. It lets you know exactly how much longer until this candle closes out. So even though I'm talking to you from a quarterly and bigger picture, please understand a lot can happen in 2 months. A couple things that I notice on this chart when we look at it is that we created a demand zone, and that demand zone, we were all over it several months ago. We knew exactly what to look for. As soon as this candle broke above there, it got extremely bullish. Once we reached about 88.7% of that high, we had a 95% probability we'd be looking at highs. I talked you through that. I coached you through it. And then, this over here is called Fibonacci extensions. Now, I anchored my Fib extensions on a range and I came up with these numbers. If you look here, we have not quite made it here. And my notes for this week are really straightforward. Price is slowly inching towards the extension target of 496.58. Now, again, if this, then that. If price can take out last week's highs, then I do believe we have a high probability of hitting 496.58. A new support level, though, because we made new highs, I am creating a new support level. Again, this is a quarterly candle, so these support levels may sound like they're too far away for you. That's okay. This chart is specifically made for traders that are looking at the big picture who can't day trade every single day. All right, so 470 by 456 is going to be your support. Use the neutral strategy, the strategy that I just showed you, in order to trade from week to week. All right, so you could still be bullish on this quarterly, but if you need to be bearish, then you're looking at that neutral strategy. Okay. All right, so that's what I got. A couple other things just while we're sitting here, just for anyone that's never listened to me. Listen, guys, the EMA cloud, this is part of like the indicators that I use. It is very, very valuable. You can see that on a quarterly chart. Every time we've come back here, it's been a great opportunity to buy for the long term. So I wouldn't be necessarily worried, even if we get, a rate decision that the market's not happy about. If Fed Powell says something, if earnings don't go too well, if for some reason we come all the way back to the support levels that I'm looking for, it's a buying opportunity for me. As long as we can hold above this cloud, I want to be a buyer long term. Okay, so hopefully everybody understands that. Let's go ahead and move on to the Qs. All right, and same thing here. This is a quarterly. These are the same charts we have been using for a very long time. I erased my notes from last year. They were amazing, and this year will be amazing too. I'm all about law of attraction. I'm very confident about the analysis that I give you. And so I hope that you really enjoy the levels that I'm giving you because this bigger picture can really save you. All right. Don't get caught up in the 5 minute charts every single day. Notes price reached the fib extension, right? And we talked about that the week before, just shy of our fib extension target as mentioned in our last note. Support is 402 by 391. Boom. We hit it and we got a little bit of a rejection. Your short term support going into this quarter, right? 408 by 395. Your long-term support is 370 by 350. And if you take a look here, you guys can see I'm using my anchor from here to here to get this 23 and 38. That's going to be your short-term support. And then again, my long-term support comes in at or around this demand level. Remember, demand and supply levels. We took out the supply here, and the only way that we can find targets to the upside is by using fib extensions, and that's exactly what these are. And they are exactly working like we want them to. They're hitting them, and then they pull back. And then I am using, once again, these levels right here as short-term support, and then our long-term support is this demand zone. At any time, if price were, let's say we extend, boom, this week is bullish as hell, we push up like this, then we start to pull back, we'll look for that inside, and then inside and down will most likely lead us into the inside and up formation, which is your demand zone, which is right here. You would see that there is confluence with demand, Fibonacci's, but also your 9 EMA cloud. And just like on the SPY, look at this cloud. It's been absolutely reliable. You can see what happens. You can go back and test it since the inception of the market, and you can see that it's done really, really, really well. So once again, this is setting up to be beautiful. One, be a good steward of your money, but if for some reason we get that bigger pullback later on in the year, we know exactly where we'll be buying. They're making this almost like too easy, in my opinion. I mean, look at the indicators, guys. They've been absolutely on fire. I told you coming into this year, even before, I said, look, I'm getting a signal, folks. And if we go back and look at the trendy signals and look at the probabilities of higher highs after you get a trendy signal, we had a very high probability of hitting all-time highs, and here we are. I have not steered you wrong. We're doing amazing. We're going to continue to be amazing, but just understand we still have 11 months left in the year. And so don't get too far ahead of your skis and understand that there's a possibility coming into this week. And once again, if I were a wagering guy and if I like calling tops, this would probably be the week that I'm really interested whether I want to put my chips on the black or the red. You know what I'm saying? It could be a green. Maybe it's neutral this week. Could be. But I would love to see a little bit of volatility come into the market, and we'll go over that here a little bit later, the volatility index, okay? So the dollar, let's talk about the dollar. Dollar is super important. Now, unlike the quarter, we're going to come in here to a weekly chart. If you've been following me, these are the same charts that I've been using for a very long time. Why? Because they've been working for a very extended period of time. This is your supply zone. We found it by identifying this inside and down. Price came down, it created demand, or it came into a demand zone over here. And if we look over here, you can see the inside and up formation right there. We found love there, okay? And then we created an inside and up formation here in July of 23. I coached you all the way to the downside, and while the dollar was moving down, I said stay long in the market. We continue to do that, and boom, we start to see that the dollar hit the demand zone and starts to pick up. And even though we're having some fluctuations of bullishness this month, there is room here, one more factor, room here to be a little bit cautious coming into this week. All right, so the dollar is showing some strength. However, it's very important to understand that from a Fibonacci, what I teach you in a downtrend, this 50 is a huge part of whether or not we can see a bigger move in the dollar. Going over the Fibonacci, remember the 50, I call it the tug of war. Basically, what it means is bulls and bears. This is the one spot they're really going to fight. And we expect chop when we are at the 50. And that's exactly what's happening to the dollar. It's not until the dollar can actually get above the 618, the golden Fibonacci level, that we can actually see a bigger move in the dollar. So read the notes down below. All right. We got the bid up as expected. Take more measures of caution. If the dollar is able to sustain above the cloud, roughly 103.85. And if we come over here, we're at 103.47. And these are the same notes from last week. Market can see selling pressure if price sustains above 104.6. Now, the bull market resumes if hard rejection here, and then you see the dollar break under 102. You'll notice that there's a lot of lines on this chart, but the reason why is because I have alerts set, and those alerts are based off of these numbers that I'm showing you right here. Okay. All right, so let's now move into, and hopefully you guys all understand that. Basically, when the dollar is bidding to the upside, be cautious in the overall market, and when it's moving to the downside, we're looking for the market to sustain its rally. Now let's go into the 10-year Treasury. This is really straightforward. There's nothing new here. What I've been saying, it's the same thing, is that this is my expectations going into this quarter. For the next 2 months, I expect this to be your range. All the way up here to all the way down here. This is an inside and up formation. This is an inside and down formation. And I believe the TNX can fluctuate between these two levels. Now, if the rate decision, there's some kind of surprise and things go wild, I would definitely be concerned if we start breaking back above this 4.5 level above here and we can sustain it for 3 days this week. I would definitely be concerned. Okay, so you're probably going to see a big cycle to the downside, sideways to down for several weeks if we can sustain prices up here. Okay, so again, if you want, you can create alerts. Okay, one up here, and then we would put one down here. That would be awesome if we could see TNX drop below the 3.4. But as of right now, these are your two major levels going into this quarter, and it's the same levels I've been talking about. Okay. All right, so the next thing, this is the big one. I mentioned this on X as well. This is the SKEW, and if you guys don't know anything about the SKEW, please just Google it because I've been talking about it for so many years. I feel like my voice gets tired just talking about the SKEW. It really is straightforward. When the SKEW drops down into these green levels, basically what you see in the market is extreme fear. So the exact opposite of what you're seeing right now. All right. When you see levels of the SKEW up here, it's called extreme greed. If you were to put the SPY or QQQ chart behind this, and which you can do, you can overlay it if you want, you'll see that when we are at extreme levels to the upside, timing is the variable, and we're looking for the overall market to pull back. Now, I've said this many, many times for probably the last 6 months. What I found, and I had to change my chart, if you will, I kept the green down here, but I keep these two red levels. And the way that they've been doing us is kind of dirty because a lot of like technical traders are looking for a big pullback. And, basically what they've done is they repeated what they did over here in 2021. All right. They kept the SKEW in this level and they made you feel like there was going to be a big pullback. It never happened. And if you were watching the technicals and really difficult time because it was hard for people to press the gas. You know what I mean? There's a lot of traders that will claim they did their best ever, and I do believe that. But it also was very difficult for people like me who are looking at technicals and saying, "Well, I don't know, man. There's so many things, that are saying we could get that pullback." So it was definitely hard to really lay it on the gas pedal, if you will. Well, instead of being like I was back in 2021, I was thinking to myself, well, we got to do things different, John. All right, we got to figure out what the hell they're doing. And this is exactly what they've been doing. And I've been coaching this really well over the last 6 months or so. Is every time we get to this level, so it used to be this level, but every time we get to this level, it's a buy. It's a buy the dip, baby. Like you buy down here in the 130, 133s. It's not until if it happens this year, if we start to break down and close below here more than 1 to 2 weeks, then I'm looking for a really big pullback, and then I'll be buying risk on when the SKEW gets down here. But that's not happening. So what's happening is the SKEW hits here and we actually bounce. And at the same time, this is where most people, if you look at like different analysts and different blogs and different things on X, on FinTwit, this is where most people are feeling fearful. But to me, historically, it's showing that this is working over and over since April of 2023, guys, almost an entire year. You buy the dip here and then it works out. Now, what's important to understand is when we reach these levels in the SKEW, it's time to back off those longs and let the market do what it wants to do. And if it slowly comes back into here, you probably get like a little relief bounce in the market there. And then you get that extreme, not extreme fear, but fear. So more neutral to fear right in here. And then once again, this is where I have to buy. So these two levels, believe it or not, these are like the secret sauce, baby. They have been working so well, and I hope that you add them into your SKEW chart, okay? So again, these are working until they're not, but historically, anytime that the SKEW's sitting up here, guys, it is definitely time to be thinking, hey, we could be getting in this market some sort of dip, micro dip, if you will. All right. I think I hit on that just enough. All right, and then that brings us over to the fear and greed. And once again, if we come over to the fear and greed, you can see that we're at extreme 77. There is no reason, I'm not trying to scare anybody, there's no reason why we can't see this guy right here go all the way towards 100. I've seen higher numbers than 77. So please understand we could have what's called like a blow off top in the market where you just cremate bears, all right? And that's definitely possible. All right. But all I'm showing you is that everything, the dollar is wanting to act like it wants to get over that 50 and up towards that 618. The TNX is bouncing out of the inside and up. The SPY and QQQ are at all-time highs, and they're making lower highs on the 4 hour. And we are in extreme greed, and we're set up for earnings for big names, and we have a rate decision. I mean, I just think that this probably should be one of the most volatile and most exciting weeks of 2024. So I can't wait. I'm really excited, and it could be a big bang, or maybe I'm wrong and it's just a big dud. All right. But that's what we got right there. Now, the next thing I'm going to do is minimize this here, and we're going to go into the ES futures. So for all my um, future traders, or even if you're not a futures trader, please hang on just for a few more minutes. This for me, this is my baby. I've been teaching off of this for many years, and it's okay if you're not a futures trader and you're thinking about a futures being a futures trader. Definitely like come and check us out. I'll definitely answer your questions. I love futures trading. I don't necessarily have to trade it every single day. It's a great tax, if you will. It's more of a like a 60-40. Not only that, but you can use micros to kind of get started. The quick, easy ratio, anything that I talk about on here, every 10 points equals $1 in the SPY. So let's talk about what I'm seeing in the ES futures. So again, you would relate this to the SPY and the SPX, okay? So my analysis here. So far, what's happened is we moved up very nicely. We created an inside and up formation over the previous all-time high. And then we moved up into the extension targets I gave you. We hit the 23.6, the 38.2, and then we're just shy of the 50. Now, opening up tonight, I'll tell you, all you have to do is just take this level and say, okay, we're basically neutral in there. If 49.09 can hold, then we can see 49.40. If 49.09 breaks down, we can see prices pull back to 48.71. And again, this is from a weekly perspective, okay? Not like a 3 hour or a 5 minute or anything like that, okay? So again, weekly. So all I care about are the weekly candles. Where does the weekly close by the end of Friday? And this is the chart I want you to use if things start to pull back and so forth on the ES futures. You want to be looking at this, okay? Couple things that I noted, 9 EMA is here. We'd expect a bounce. We have the trendy edge here. We'd expect a bounce. So some nice confluence coming in or around 47.63 by 47 and a quarter. And then down here, this is identifying a demand zone on a higher time frame, but also you can see there's a gap fill here. So we definitely want to be aware of that. But I do feel we have strong support in here. Now, it's not until, and this level for right now is good for 2020 four, is that there is no trend break, and all I did was measure from here to here. This is your 618. This is, by the way, one of my favorite numbers, 444. So 4444, this is your trend break. If this breaks this year, that means this entire rally is broken. Okay. So that is the major number for 2024 right now. Going into the daily, this is charts that I put together for a smaller time frame, and you can still have fun off of these. So a couple things I did here is I just took the resistance level, I moved it up to our trendy edge. I put the short trigger right above it. And please understand, we don't have to necessarily go short here. I showed a really nice example on X about our NASDAQ from last year, or sorry, last week. And we are looking for specific signals to come in to go short off of these. Basically, when we get to a level, we go to a smaller time frame, okay, and then we look for what's called the trendy turns. So when I say smaller time frame, like even a 5 minute. All right, so these are just triggers. Once we get here, we go to a smaller time frame. We look to see if we want to execute those or not. So again, buy triggers are down here. You guys can freeze and put these levels on your chart if you like to. Just know that your first buy trigger is down here at 48.67, and right now off the daily is kind of pretty close to being confluent with the 9 EMA. The 4 hour looks what I would consider the 4 hour looks kind of messy. And the reason why it looks messy is because during that entire uptrend, we created a lot of different support imbalances, demand zones, and so forth. I think we're pretty safe to say that I would not expect range to break down below here. All right, this week, so around that 46.67, it's been tested. This is the closest support zone on a 4 hour, 48.12 by 61, that I'd expect buyers to come in. And guys, again, I can't make this stuff up. Everything I do is before price gets there, and then I teach you what to do when we get there. Just like this imbalance that I found before price got there. Once price came there, that's where you look to go long, and you can see it worked out very, very well. All right. So again, inside the room, you guys can see all the different levels that we have in case there is an emergency to the downside. You know exactly where we should be finding some love in the market. Okay. All right, then that moves us into the NASDAQ, and we want to come over here and take a quick look at that as well. We're going to come over to the weekly, and this is about every 42, 44 points, about $1 in the QQQ. Same thing here, really beautiful chart. You guys can see that. It's pushed up nicely into our extension targets. It actually got 100% extension into 17,786. Coached you very, very well there. We do have some divergence, meaning, there's a lot of error between current price and the 9 EMA. But one thing that I'll note is that the 9 EMA is confluent with our previous all-time high and our trendy edge down here. It did come back 2 weeks ago and gave us a beautiful long out of here to the upside. And now, just like I told you on the ES futures, just take your fib extensions, and this is what I would do. The 618 is your support, so 17,393 would be short-term support. 17,393, and then your short-term resistance is 17,566. So basically, you could draw a neutral around this box and just say, hey, I expect a little bit of volatility and chop in here. Okay. Again, a lot of stuff coming out, so I think the market's going to wait to see reaction to off of those type of things. All right. And then on just so that I'm clear, on rate decision day, we'll be setting up charts the night before or that morning for the zones that we'll be trading into the rate decision. Okay. Can't wait. That's fun stuff. Anyways, this is the NASDAQ. It hit our trigger short. So I left that just to show you. Well, no, actually, I changed it. We hit it to the tick last week. Okay. And I showed that on X. I changed it. I put our resistance right now. You'll notice if we zoom in here, we have an inside and down formation. So I put your resistance right on top of that. I would expect if we get a bounce, we'll resist here. And again, this is the key thing going into this week. If we can't make new highs out of all the different catalysts that are popping off this week, I would be definitely concerned. Okay. from a technical perspective and understanding how bigger money thinks, I'm not surprised, but a lot of traders will be because they'll be like, well, all this good stuff happened. Why did we move down? And if we get that pop here, then just remember, we're not making new highs. And if for some reason it looks like this, guess what? Technically speaking, we never made that new high I talked about, and we're just headed down into a lower demand zone. That's all. All right. So don't freak out. It's definitely warranted at this point. Just don't know if it's actually going to happen this week. It's just something I want to make aware. That's all. Let's go over here. This is your 4 hour. Same thing. We have imbalances and so forth. You could see that it worked very, very well. Let me show you just really fast. I don't have this. I only have this on 30. Let's go to 90. And that way you guys can see we created during this big move up, we created a lot of different imbalances that we can come to. This is the chart we have here in the room just in case, again, some sort of emergency hits the market and we pull back to the downside. Other than that, we are going to send out our blueprints for tonight on the NASDAQ and ES futures. You guys know how well those do. So I'll be working on those, but most likely, this is from Friday. All right, most likely we're going to use the same one that we had. The only thing that's going to change are the liquidity chop zones. So I'll be updating those. I'll send them out so you guys can see them. But other than that, guys, I can't wait. It's going to be an amazing week with you. It's been a nice, profitable year already, but it's time to start to kind of tighten the belt and think, how can I be a good steward of my money? I will be, as always, trading quite a bit. I love trading. My volume of trading is pretty high compared to some traders. Another thing to note is that I love trading earnings with my spreads. So most likely all those names that I underlined and maybe even more, I'll probably be putting different spreads on. I just like sticking to the process and letting the probabilities play out in my favor. If you have any questions, please reach out to me. If you want to check us out at Simpler Trading, please go to simplertrading.com and look me up under Our Traders. You'll find Trini John, you'll find the room there. And not only is it a bonus to be able to see our API alerts, see live trading, but you also don't forget we have one of the best traders in the industry with Melissa, who over a 13-month period, and I still think to this day, I'm pretty sure, Mel, if you're listening, she had a 77% win rate. She does very, very well. Very, very good mentor when it comes to trading. So if you guys are interested, it's not just about me, it's about all of you. It's about seeing your success. And we doing this poll every day at the end of the day, and it looks like we're hitting about 70% winners, meaning the people in our room. 70% of traders are winning, and the other 30%, and I'm sure that varies. Different traders, having a hard time or just trying to find their footing. That's what we're here to do. And I have to say, we're definitely working towards the right direction. So very proud of all of you. Can't wait to see you tomorrow. Have an